This is Business Week Armenia, CivilNet's weekly economic digest. Here's what's making headlines in Armenia this week. A landmark free trade agreement between the Russia-led Eurasian Economic Union, or EAEU, and Iran will go into effect in mid-May, a development observers say could significantly boost Armenia's economy. The agreement will enter into force on May 15, Russian state media quoted Andrei Slepnyov, a senior EAEU trade official, as saying this week. The agreement is set to eliminate tariffs on more than 80% of goods traded between Iran and the EAEU's 5 member states, and is expected to boost trade by more than double to $12 billion in the near term. Longer-term estimates of the deal's impact suggest trade between the Islamic Republic and the bloc could reach up to $20 billion by the end of the decade. While the agreement is expected first and foremost to benefit Russia, which by virtue of its size dominates the EAEU, observers say the deal could also bring substantial benefits to Armenia, the only member of the bloc that borders Iran. Senior Iranian officials have previously called Armenia their country's gateway to the EAEU's vast market of some 185 million consumers. According to official figures, Armenia's trade with Iran reached $737 million last year. That represented a modest year-on-year increase of about 6%, but fell far short of the highly ambitious $3 billion annual trade target set by senior Armenian and Iranian officials for the long term. The EAEU promotes the free movement of goods, services, capital, and labor among Armenia, Russia, Belarus, Kazakhstan, and Kyrgyzstan. Trade within the bloc amounted to $98.3 billion last year. Trade with other EAEU members accounted for more than 40% of Armenia's foreign trade last year. By contrast, trade with Iran accounted for just under 2.5% of Armenia's foreign trade. Armenia's finance ministry confirmed it has issued a new $750 million eurobond as the country seeks to manage its growing national debt. The dollar-denominated bond was listed on the London Stock Exchange at the beginning of this month and matures in 10 years with a 7.1% yield. The bond attracted unexpectedly high investor demand, with total orders topping $2.6 billion. The finance ministry said it welcomed the interest, saying in a statement it underscores the stability of Armenia's macroeconomic and financial systems. Eurobonds refer to bonds denominated in a country other than that of the country where it was issued. Despite their name, Eurobonds are not necessarily denominated in euros or issued in the European Union. Armenia last issued a Eurobond in 2021. The move comes as Armenia's national debt has, as of the end of the last year, now surpassed $12.8 billion, pushing the country's debt-to-gross domestic product ratio to just more than 52%. This year, Armenia is expected to pay about $2.9 billion to service that debt, which is split nearly evenly between money owed to foreign lenders and domestic creditors. Officials attribute Armenia's rising debt in part to the government's decision to take on Nagorno-Karabakh's outstanding loans and liabilities after the local administration collapsed in fall 2023. In response, Armenia approved a measure assuming 70% of the more than $800 million in debts accrued by Nagorno-Karabakh's former banks and creditors. Increased government spending on efforts to integrate the more than 100,000 Armenians displaced from Nagorno-Karabakh has also contributed. In 2022, the International Monetary Fund approved a 36-month, $171.1 million standby arrangement for Armenia to protect against potential balance of payments difficulties. So far, Armenia has treated the arrangement as precautionary and made no withdrawals. Armenia's debt repayment schedule runs until 2054. Speaking with CivilNet this week, senior officials at Armenia's central bank defended the country's new cryptocurrency regulations as necessary, while crypto business heads decried the rules as too onerous. The new law will make the crypto sector more attractive to domestic and foreign investors and balances developing the sector with protecting the public interest, Central Bank Deputy Chair Armen Nurbekyan told CivilNet. Edvard Avedisian, the founder of Bitcoin Armenia, hit back at those suggestions, calling the new regulations quite onerous. Requiring crypto companies to meet minimum capital requirements, rent office space, and be audited will significantly raise firms' operating costs and could lead to the virtual elimination of the crypto sector in Armenia, Avitisyan warned. Last month, Armenia approved a first-of-its-kind law regulating cryptocurrencies. The legislation empowers the central bank to oversee crypto transactions made in the country and requires crypto companies to register themselves, disclose their owners, meet minimum capital requirements, rent office space, be audited, and follow rules aimed at preventing money laundering and terrorist financing. Previously, crypto was completely unregulated in Armenia. Figures showing the number of crypto users or value of crypto assets in Armenia were not immediately available, though they are believed to be growing. If you understand Armenian, you can find our full in-studio interviews with both Armen Nurbekyan and Edvard Avedisyan up now on our website at civilnet.am or through the links in the video description below. And as always, keep following CivilNet for the latest news and independent reporting from our contributors on the ground here in Armenia.